So crews, here you go. This is the video. So this is how we'll look at it. We'll look at it with this leg, okay? We'll do a bar replay to make it easier. So we're currently in this leg, right? So this is what we would call external buy-side liquidity. External buy-side liquidity, okay? And we'll mark down the bottom part down here as the external sell side. External sell side liquidity, okay? So we got our two targets here, which is external buy side, external sell side liquidity. So then, if we're looking for longs, this would have been our break-even point because this is the next major swing point within the leg. It's not great. You could have this as your internal point here, and this is a completely fine internal point. However, this is also a great internal point that you can use. I personally would have targeted this point. And that would have been the internal taken. You can see the reaction we've had after the internal being taken. We've taken the internal liquidity. We haven't pushed up more to go for external buy-side liquidity, and we've come back down. So that's our internal liquidity for if we're looking for longs. So now we're looking for shorts. So here we can clearly see that we've got a bullish fair value gap that if we tap into, we can respect, right? So if we end up getting a short setup, we're going to look at this, and we're going to look at this. If we get a short setup, we're going to look at this. This is going to be our internal liquidity. So I had a conversation with someone yesterday, and he argues that this is more the internal liquidity. He's not wrong. There is obviously resting stops down here, just like there's resting stops here and there's resting stops here. However, for us to be able to go to a nice part of internal liquidity and go up to a break-even point within a trade, we're going to target this point because we can easily respect this. This internal liquidity is also very close to the external liquidity, so it's not a great point for you to move your stop loss to break-even and target for break-even and take you out of a risk-free trade. So this is what I would mark as the internal liquidity. They're both not that great examples of internal liquidity because we're in a bit of a smaller leg and we don't have obvious swing points within the leg to show us the internal liquidity. However, I think he was targeting this as the internal liquidity, but once again, I just don't think it's a great point for internal. I'm not sure. It might have been this that he was targeting, but really and truly, this is the internal point. We've come up, we've displaced up, we've had a move up, we've come down, we've got a higher high, we've got a lower low. So this is a good swing point within the market to have your internal target. So obviously, if we had the short setup, we would have had our stop losses to break even. I don't think we did even take the external. No, we didn't. So let's just take it back a step. So we've had the long setup, right? So we've got the long setup. So now this was our internal target before. However, this internal point is gone within the market. So what my new internal point would be for longs would either be here or here. This one is a little bit better for an internal point. Why? Because we've got this small little 1 minute that we could have respected. Obviously, we display straight through it and closed above it. So that's great. That's a good sign. But this is a good point for internal liquidity. One, because it's a good swing point within the market. There's resting stops here, just like there's resting stops on these candles here. However, we could have easily respected this bearish fair value gap. So that's essentially just a quick overview on liquidity. And you wanted to know something else. You wanted to know about discount, premium/discount. So if we're looking at premium/discount, we've had such a big, strong move up. So without checking, this would have been discount. This would have been balancing out, and then this is going to be in premium, right? Because we're high up. So there's another way that you can check without having to look at it like that. You got this indicator here, 200 EMA filtered parabolic SAR. You enable this, and this will show you where you are in. So currently on this point of the market, we are in premium. So taking longs are a little bit more risky at this point. However, if the convictions are there, like we did on this trade was a 5 out of 6. There's no reason for you to not take this trade. Why? Because if you was always in a premium point of the market and you're scared of taking longs, you're going to miss out on so many plays. Because we are, like I said, in premium, but that doesn't mean we need to come down into discount and take more sell side liquidity. This trade had 5 out of 6 convictions. This trade worked beautifully. There was a few people that caught it, and this correlates again to the conviction list. The conviction list won't have the convictions if it's a bad play. So if it's a risky long and there's not obvious convictions for us to come up to buy side and take more buy side liquidity, the convictions won't be there. So this is why you need to leverage the conviction list and use the conviction list as a reason to why you should and should not take trades.